Welcome to RealPage Economy Express. We are here to break down the latest economic trends. From job numbers to housing markets, we are covering the key highlights you need to know. So let's dive right in. Starting with the employment picture, October's job market showed very little movement. Total non-farm payroll employment added just 12,000 jobs, leaving the unemployment rate steady at 4.1%. We saw job gains in healthcare and government sectors, adding 52,000 and 40,000 jobs respectively, while manufacturing employment declined by 46,000, largely due to strike activity. Additionally, employment in some sectors was impacted by Hurricanes Helene and Milton, which caused disruptions in the Southeast, particularly affecting data collection and employment in storm-hit areas. On the unemployment insurance front, initial claims for the week ending November 9 decreased by 4,000 to 217,000, a positive sign suggesting continued labor market stability. The 4-week moving average also dipped by 6,250, reflecting resilience in unemployment levels. Inflation data came in with a slight increase in consumer prices. The Consumer Price Index rose by 0.2% in October, matching the previous 3 months. Over the past 12 months, CPI increased by 2.6%, driven mainly by shelter costs, which were up 0.4%. Now, the increase in shelter inflation is notable as it accounts for about 1/3 of the overall CPI. The Producer Price Index, meanwhile, also increased 0.2%, highlighting modest pricing pressures at the wholesale level. This consistent rise suggests stable but moderate inflationary trends. Turning to monetary policy, the Federal Reserve recently lowered its benchmark rate by a quarter point, the second reduction this fall. Now, this decision follows a meaningful drop in inflation, now nearing the Fed's target. While the federal funds rate cut is good news for borrowers, it may take some time before we see a noticeable impact on household borrowing costs. For consumers, this means potential relief in areas such as mortgage rates, auto loans, and credit card interest rates, although the changes may be gradual. Next, in the construction sector, spending in September reached $2.15 trillion, up slightly from August and 4.6% higher compared to last year. Residential construction edged up by 0.2%, while non-residential construction saw a pretty small decline. Public construction spending, notably in education and highway projects, also increased, reflecting strong government investment in infrastructure. Finally, looking at the housing market, mortgage applications saw a slight increase of 0.5% for the week ending November 8. This was the first rise in 7 weeks, despite continued upward pressure on mortgage rates, which reached almost 6.9% for a 30-year fixed-rate mortgage. Thanks for tuning in today on RealPage Economy Express. Keep an eye out for more updates, and we'll look forward to bringing you even more insights next time.